Morning. Alright. So, um, this morning here, well, yesterday I was worried about a few things. So, this morning I was a little tired. Got up a little bit late. It's my bad. And we have some news at 10 a.m. Okay. We have PMI and job openings as well on 10 a.m. So for now, I'll just get started on analyzing previous day high and lows. My bad for starting my stream a little bit later, but that's it. Let's keep going. Judging from the daily here, um, we have a daily order block blocking us off in this zone, but let's see how it's react to this one. Because yesterday price did break the trend and continue pushing down. We have we still have the daily trend also broken as well. Okay, seems like we're in a mixed area where price are uncertain. I'm uncertain where price is gonna move for the moment being, so I'm just gonna trade with the trend of the short-term market. Bouncing off of here. Looks like we poked through just enough, just enough for um, it to be a an unofficial break, I would say, unofficial break. Let me mark this whole zone here because it's interest. And 3, same thing, nothing much. Didn't break that one, but it's fine. There's a 1 hour. Let's see anything else happening here. We see a trend. Yeah, it matches up with the order block, so that I wouldn't mind that. Looks like price is slowing down for the news. Understandable. See 1 hour. Come down, bounce off that 1 hour. Over 30 zone here. Interesting. It's kind of like a head and shoulders, I would say. Trend break, trend bounce. Yeah, trend break this one. Bounce right back on that. Did not go all the way up though. Looks like it would have been a perfect one, but the candle hints kind of do the same thing there now. Trend got broken. Let's see if the Fibonacci matches. It matches the 0.5 Fibonacci. But we still also have a long room to go. So if we have a trade here, this is 7 a.m. so that doesn't count. Just know the trend has been broken. If that's been broken down, let's continue with this dynamic trend line here, which is have broken through a win. Yeah, still bouncing off of it. Broke to the trend just like that. Price come up by 50%. It's a good entry right here. 3, 5, nothing there. We do have a 1 minute right here though. Small in the 50 zone. When 9 a.m. kind of opened it up. This zone open. Even this one here, price broke through the trend, come back down, retrace, push up even higher. But now this one come all the way back to the 50%. The 50% did match it. It does match the interest zone. Price come all the way back down to it as well. Really cool. And we have good rejection from that zone alone. So after this, a few rejection right here, I was basically entering the trade. This could have been one of the trade I would have entered. Right. Mark this as adjustable trade. And I would say from that candle alone, price come up rejection, not that much. Come down here. Let me just use replay bar actually to make this more realistic. Come down, reject all the way up once again. That's good. Price come down, reject, reject, reject. This next candle closes and it is a rejection. It's good. Next candle pushes all the way down, reject, so it is losing some power. Next candle goes up and this can go to the previous one. So now we want to look for price coming back down to this. And then we can enter in here, let's say around 5 pip stop loss to be realistic. Info 1 to 3. Still within the zone, which is good. Holy shit, I forgot. I forgot my speed here for the X3. 5, still within the zone. We have that one there. 3, 1. So trying to be realistic on the bristle wood, but it seems like price did come back down once again, kind of forming this arc. And we have another trend to basically obey as well. This is where current price action is. I wouldn't really enter a trade here because price pretty much broke through once again into this dynamic trend. Let's see, this risk reward ratio has not been paid off. I would say here that's around 1 to 3. That's good. It's here a little bit later. Still protecting the trade. 4.5. Still, it doesn't reach 1 to 3. Price still come back down and kind of retrace back down again. After this candle kind of pushed through to the break even, I would exit out anyways. We have a break downside. See, we can have some kind of retracement back up once again. From this point, let's just map out our Fibonacci first actually. 0.5 is around there, which price have in fact achieved That's why it bounced off so sharply like that. Price have achieved that. Okay, have achieved the 1 minute or 5 minutes there. Just something that I'm applauded for because it respect the trend pretty nicely. See how this candle close. I'm gonna use some key level around where price kind of bounce off. I would use a 3 minutes. That's where it is. And 1 minute it's all the way up here. Fibonacci, let's see if it matches. Barely on that part. I should just quite far. It's inside the zone, and this Fibonacci doesn't match as nicely. So I'm gonna wait just a little bit to have a better entry. Yeah, I'll just wait a little bit more to have a better entry. See how it goes. But let's see review on this one here around 9. Hmm. Hold on, let me see hold this here. Once again, it's bouncing back up. Still maintaining the integrity of the trend itself. If we were to trade off of Fibonacci alone, I would want it to be a little bit more clear upfront, I would say. Let's come into the zone where I want it to be. Good. Let's just quickly map out this candle here because it's gonna be fast paced. Cool. I'm gonna map it out just like this. There's still a lot of room for it to swallow. The 5 minutes there, a little bit higher, even better. It seems like it gathered some buy side liquidity from this 1 minute before after it broke through. 70.5 an optimal entry zone. I'm gonna use 4 pips for the stop loss, dynamic stop loss for now. Just so I have it on the screen. Let's see how this candle and the next few candles reacts, because we are within the 5 minutes and the 3 minute zone, especially the 5, I would say. See how this one reacts. Keep pushing through. Seems like we have a far right here. Even if it reaches the 1 minute, if it's within the zone, we still want to see some kind of reaction of price slowing down. It seems like it's not slowing down anytime soon, and we finally broke through once again. This trade is invalid now. Let's delete that. So from the order block perspective, price did basically bounce off of this once again, and from the 15-minute perspective here, I see that it bounced off of the 15-minute order block, right? And it basically wants to continue. It breaks through this previous high, it comes up, breaks through this previous high, comes back down once again, in which case it has retraced for the first time over here, where it matches the Fibonacci 50%. And the adjustable trade, or a trade it could have been, I would say, a could have been trade, can be around here. Stop loss anywhere from the candle rejection. Wait for it to slow down. And then 1 to 3. Around where price is achievable, I would say. Achievable zone of the trend. So that's an adjustable trade of where it could be. But I would say do a bit more practice on these kind of trades, because there has been retracement before. So I guess if the zone matches the Fibonacci level, then we can just go ahead and take a trade, um, even without anything else. So I would say adjustable trade here, and testing TP levels. I will have to look back on this and see how this officially is, if it's called official or not. But yes, we did miss this trade because we have slept through it. Three, yeah. Did miss that one because we slept through it. I'm just worried about my mail. It's just a few things on the mail that I'm expecting, but so far I haven't seen it. So I have to call the USPS Postal Service to see what's going on. Okay, so it reaches all the way up to the body candle of this 15-minute order block here. It is kind of raging in the middle. It's bouncing off of this, and it's bouncing off of that as well. So it's mixed at the moment. I don't feel too comfortable to trade right now. Have another trend, okay. Kind of broke through both of those as well, coming back up to the zone anyways. So this trend line bounce is basically almost invalid, but since it's still within the zone over there, I would still keep it on the chart. It just doesn't respect the order block, but does respect the other trend coming down though. Let's draw a few 15 order blocks here so we know. News coming out, so that's one major thing. We have rejection sign, that's good. Bounce back up once again, that's also good. Means it's respecting the trend. We have good rejection from the 15 body of that as well. the major thing is that it already broke through the one, no, the 5 minutes and the 3 minute structure. So that is kind of like the head and shoulders and how it's kind of formed before it actually breaks out. So this here can be a mixed zone. We need to identify these kind of pre-set up here. You can see how this can be formed. It can, because it broke through the previous high, which is the structural order flow, order blocks. It broke through the previous high. That means that it can basically form a head. What is it? The lower low and higher low, basically a head and shoulders, and it continues to retrace down here and then reside around here, give us some retracement, or it's just gonna shut up once again into that zone. So let me go into the Forex Factory website and see how this forecast is going to be. Mm, it is less. Okay. So it's forecast that the US is not going to have that much. So it's forecasting less. So price which is 70.5. See how this is going to react. Some good trend here. Let me go ahead and do some test TPs. Yeah, stop loss way a little bit too big there. There to be a 1 of 3. Should be a little bit lower down there. Pass through the range in which case I'm not really that comfortable with. Even this zone, 1 of 3 is still basically that. Note to self. Okay, I'll make that note to myself there for future references. Bounce off the trend doesn't have to necessarily respect the order block. This could have been a trade there. Just pull the trigger when the setup arises. Alright, so we're just watching it. It's almost 10. Price may come up once again in order to retrace down. But we are in fact in a downtrend. So now it is respecting the 5 minutes order block here, the big one. Trying to see if there is any retracement on the 3 and the 1 minute, a little bit higher here. See how that goes. So we have to have a bounce here on the 1 body. I'm just gonna map out the trade. It is a trend line bounce off the 1 minute. Interest though is more on that for the 3 and the 5 as well. But it's a trend continuation. I don't mind drawing the trend, but you can see where it goes. It's at the end of the line and within the zone 2, so I would need to wait for another rejection confirmation before I can enter in the trade. it reduces a lot of losses, just because some of these setups, if you just take the setup itself, that means that the algo or the bot or the algorithm bot, they will identify those and they will just take the trade anyways. And as we confirm it with a few rejection and a few signs, we can eliminate those things because the candlesticks tells us a story of how the price is reacting as well. This candle here seems to be in good rejection, and it seems like price gonna poke all the way through, see if this gonna maintain it or not. Really high up there. Yep, nope, it has not been maintained, so this one is another trade is invalid. Price basically continue to push all the way up. It's still within the dynamic trend. I wouldn't mind. Still within that dynamic zone. Nothing on a 30 minutes. Price is ranging, and market like these, you can't really guess the overall trend of where it wants to go. That's why I just trade according to the short-term trend. Bounce off of this, see how this goes. Looks like we're just gonna have to wait until the stall of the news coming out. If we have a bit of a setup before news, I'm just not gonna take the news setup because it doesn't make sense. Seems like we have that official break of the trend, but within the 15-minute, may be able to retrace down. Let's see. Yeah, it looks like we're just gonna wait after the news. So probably gonna be back around 9:05. No, 10:05. Around then, after some structure has been formed. But yeah, for now, we don't have anything to trade on. Range is still, so just gonna wait around then and maybe update in the next few minutes or so. But If anything goes, I'll come back right after 10, see how the news affect price, and then some structured form. We can hopefully find a setup for the day. Still waiting. Seems like market is stalling for the news as well. Alright, some news, and the news came out. Price is pushing all the way downside. Having some volatility here. Alright, 2 minutes passed from the news. Seems like we have good rejection from the downside. Extreme rejection, that's a sign of order consumption, as well as um, good signs of buy side liquidity coming in to stop the news from dropping further. And yeah, it did poke through. I wouldn't say an official break, but yeah, this is more of an official break over here. I'll sit for another few minutes, see how price gonna form. I need to see more structure before I can really jump in on the boat. Still waiting for it. Looks like price is dropping. Drop down. That seems like an official break to me. Of extreme volatility still at the moment. Break 3, break down. Officially breaks. I wanted to just decide which direction it's gonna go. But it seems like after the news, the answer is it's just gonna follow the news in general. Mm, Still very volatile. Just want to see a direction where it's gonna go. It seems like we're not gonna have concrete structure until the next 10-15 minutes. Still dropping free, you know. Still dropping rapidly. Looks like we're not gonna have concrete structure in the next few minutes. Just waiting on the 3 minutes now. I'm gonna zoom out to see where price can be. There's still a lot of void and inefficiency. Price wanna swallow back up here, so we may be able to take any trade if it's present our way. But it looks like it's just gonna melt all the way down there without any hesitation. So yeah, 3. Yep, still nothing to worry about. Still melting pretty fast. Let's see the. I'm just gonna project this one here to see if it's plottable. Looks like it is plottable, but if price really come back up there, in which case I don't think it will. It's just gonna push all the way back down. Oh yeah, one thing I want to say as well. Recently, the rise of OpenAI. I mean, I've been on the tail of those for a while, but OpenAI released ChatGPT, and you probably gonna heard it by now. People say it helped them with the code and algorithm trading and indicators, forming indicators basically by themselves through the help of this bot, this chat, right? They type in your prompt and it's give you a code. Most of the time, it's not gonna be just working, right? I would say 100% of the time. No, I would say like 95% of the time. If you give them a simple enough code, it will work. But 95% of the time, you have to know some kind of coding prompt or experience in order to code. So to adjust the code that the bot give you. So that's just one minor thing. I'm just gonna go over it in the next another video. Gonna see how that helps traders in general. Um, but I just have it's just kind of like interesting thing to see. People have a debate about it be the future gonna ruin jobs and stuff. I don't think it's gonna do that. Um, this is just what released to the public. There's still a lot of stuff being researched and developed as we're talking right now, and this is just the glimpse of it, right? They release it to the public because it seems like they just gather data from across the globe. Um, because it is so new, it's still learning over time, and the response is just going to get better. Um, with that said, jobs like human resources, job like just analysts in general, where you just sit in front of a computer all day at your job office, that's I think is going to be threatened by this rise of AI recently, but I don't think it's going to affect the structural a lot. I wouldn't think so. Oh, hey Jeffy, what's going on? We just got a news hit from Products Manager Index, so that's why I just project the trade right here. Looks like we don't have any signs, so this trade invalid once again. Market hasn't been good to us. What's your idea for short? Well, shorting right now at the moment, I don't see any structure on GU. That's why I'm just gonna hang around, wait until there is actual structure in order for me to form my bias. But before the news hit, there were two setups, and both of them I kind of hesitate. I didn't really take it because market was choppy. That's just something I need to learn from. It's choppy, but it's a setup, so they can both be taken. It's just that it's choppy, and my mind wasn't in the right place. I have something happened yesterday, so I didn't really pull the trigger. That's my part. But after then, 10 a.m. hits and price come back up, gather liquidity, and then push back down once again. Follow the trend of the news. Right then. What confirmed my entry? The candle rejection. So like this one right here. This is a good example right here. So the Fibonacci is just one thing, right? Fibonacci is preferred. Is not really one thing I really you know too concrete about. Fibonacci is something really good to have because the level basically indicate the discount is directly linked to psychological um, entry points, I would say. So with order blocks and the candle rejection, I have a lot of entry confirmation. It's just over time, it can prevent a lot of losses just by looking at candlesticks and seeing how it goes. So this candle right here, price come down, reject sharply. That means I just saw it drawn after the fact. Um, yeah. So after the fact, that basically this is the trade I did not take. It's basically it's a valid trade. I did not take a trigger because I wasn't feeling that well, um, and my mind wasn't in the right place. I woke up a little bit later, so that's why it's in the orange color. Orange basically mean testing or missed. Only trade with the purple. That is the default. These kind of trades here, like yesterday, this kind of trade with the purple and gray stop loss. This is the official trade. All the oranges are basically testing levels and the missed trade. Still have a lot to learn, man. Um, so that's why I just draw it. The basis of identification of the trades is something I would say as a skill. You just identify the trades and see how the chart goes. But yeah, I would say missing the trade wasn't really that bad. It's fine missing a trade as long as you can identify those trades and see those signs happening over and over. But yeah, back to your question of rejecting, price come down, rejecting it after price touches the order block where the most of the liquidity sit. It bounced back up once again. This candle kind of indicate the order consumption and buying pressure. Next candle come down, still have buying pressure. Next candle come down, another buying pressure. So, even though price have been rejected, the candlestick have been rejected, it still continued to push down, maintaining the level of the bear. And so when it touches this level, this candle is basically a hammer where the body candle is extremely small compared to the rest. Next candle open, engulfing, you can get your buy-in right there. It's just that the entry, I have a lot. So let's go ahead and pull up my notes here. So this is the notes I have. This is trendline breakout. All of these are just formed recently. I trade order blocks before. I trade order blocks for a long time being. Recently, like I said before in those videos, I put trend lines on in the last, I would say, a month now, um, to fill in the void of the order blocks. And essentially, this is the research so far. It have worked out, and my back testing basically back all of this. Zone matches entry, Fibonacci. So this one here, the zone matches the entry, which is with the Fibonacci. That means the override, the highest order of the trade setup basically. So that's the entry lags, override 3 and 5 minutes interest zone. So if the Fibonacci matches the trend and matches the order block, you can enter in after price touches it, give a little bit of a sign, especially it has broken through the previous order block. This is one of the um, more complex kind of trade. So I wouldn't blame myself too much for not taking it, but it is also one of the valid trade as well. So that's one of the criteria. Next criteria is the zone matches the trend line equals entry. So let me find you an example here. Where's the trend line break? This one, no, just like these kind of example as well. Even though it broke through the trend, basically it broke through the trend. Price coming back up and it respected this trend. There are two compound trend at the same time, and this one coming back up broke through the trend and it's basically transition upside. Did not give us any sign at all, even if it retraced off the 1 minute order block or any Fibonacci at all. It's still considered a trend break, and so it's transition upside, so it has more buying pressure coming in. So that's why I wait for a buying sign. And this one here yesterday, I did make a lot of fine tweaks yesterday. After this candle engulf, I did mark the entry, no, mark the take profit level. That caused the whole spectrum to basically turn over. And this is just one other trade that human error kind of come into play, and we just enter right after the bullish candle without marking up the take profit level. Let me find another example on the back testing. Since price is volatile at the moment, we can just go back. And this one here, the sign of rejection with no 1 minute order block. Is there a need work setup based identification and Friday caution? I did got live on 2 weeks, I'll say a week ago. Yeah, Friday, and then this one here trade on Friday. So this is the candle identification. This one is a doji. Right now it is a doji, but before when the live market happened, this was a black candle, and I expressed it before. If it's a doji like this, or just a black candle in general, then even if at the rejection and price come down, this is still a loss. This is still technically a loss. And sometimes it works, sometimes it doesn't. Even if the entry price did make this sign of rejection over here, I entry right after, price still come up and stop me out before it pushed back down. So it's a strategy, and the strategy cannot win the 100% of the time. It just fill in most of the void that I had before, and it increased my win rate dramatically. Once again, go back here. And yeah, this another example here. This one is probably the best for the zone matches trend line. So after the price broke through, this is clearly break through the previous high. That means the trend break as well. In case it is unclear and is near the previous high, just wait for it to break through the previous high, like this candle here. Broke through previous high and is now an official trend line break as well as structural break. It formed a 1 minute order block here without any 3 or 5 minutes. It's just 1 minute sitting there alone, and so it can just enter right after price broke through and retrace back down once again to that 1 minute order block, and then draw it up to 1 to 3. I expressed this trade before. Still need more work on the 1 to 3 risk reward ratio and take profit level map. I need to map out the take profit. I worry a lot about stop loss and entry, but then the take profit doesn't match as much, so that kind of linger my whole risk reward ratio. And what else? Another example here. The trade. This is just back testing. Um, I'm pretty lax on back testing as well. This one here. There's a 1 minute as well. Price broke through. Come back up here. And then retrace down exactly at the 1 minute. There is no 3 or 5 minutes here, I believe. And then that's how price coming in. You can just enter because it's a lax. One of these trades here, one of these one of these trades will basically form a new rule, and I'm still developing. It's just the trend line is a lot better in terms of identifying better risk reward ratio trades, as well as giving me more opportunities in the market instead of just following order blocks. So I'm still learning about the trend line in general. Where's the notes? But this is the gist of it. If you want to see any question or anything here, I have the trend lines, the rules that I set for myself. It's more than this. It's a lot more than just writing down. It takes a lot of time for you to get used to. That's why I'm still fine tweaking um, and still missing out a lot of trades. That's why the trades are not concrete. An order block trade, however, I'm more comfortable and have more experience in that regard. So if I see an order block structural trade, I would take it. Right? I would take the order block trade because that's just how I got used to. That's just where I came from as an order block trader, order flow trader. Recently, I incorporated trend lines, and so I'm not too not like comfortable. I would say I'm not too confident, 100% confident that I can take those kind of trades. So it has a lot more opportunity. It has a lot more trades in general. So that's why identifying the trades itself, it's a skill. And then after identifying the trade, you can slowly incorporate it into real chart market. But yeah, all of this here, it's just the rules I set for myself: 3 5 minutes order block um, and the 1 minute interest zone, as well Fibonacci, as well as candle rejection. It's mostly from my perspective alone, so it may or may not work for you. But my entry criteria is just the candle rejection, or like you see here, two lax. This is a lax entry. The zone 1 minute and 1 minute interest zone matches the trend line plus Fibonacci equal entry, or the zone just matches the trend line equals entry. But the first one is override. This one is the strongest of them all. Matches Fibonacci and the zone on the trend line. They just enter entry without any question. The zone matches the trend line equals entry, but this one is like a second place, kind of matching, but doesn't have a Fibonacci. And the rest is caution. All of this here is caution. Enter after the candle rejection. Enter after the candle engulfing, stuff like that. And then stop loss below in previous candle's wick. Yeah, all this is like special criteria, and you see this a lot more than trend line matches and trend line matches the Fibonacci. All right, so we have a bit of some structure forming here. Let's see how this is gonna go. There's this one. Um, slowly, slowly. Price broke through the trend, bounce off the trend, really nice there. There was no order block like this one here. Um, the trade like these are really hard to grasp because there was no order block, there was no interest zone in order to confirm the retracement. It just matches the dynamic trend of the market itself. And so once it touches the trend, you don't know where it's going to go. And so it is really hard to identify these Fibonacci stand alone kind of trade. So let me open up this one once again. I still use this as a reference, kind of like a cheat sheet. Um, so here the zone is within the trend, which is all the way up here. See if Fibonacci retracement matches the trend line. It does. Equals entry, candle signal, rejection, stop loss below previous candle wick. So below 50%, which is discounted price. See candle rejection. This is not really that rejected. And usually after a lot of pressure coming back in from the market, even if it bounces off, this next candle here closes. And this is where I would basically stop the projecting the projection as a whole. This candle here kind of give me the sense that it still have buying pressure, even so selling liquidity is coming in. Buying pressure is still keeping it up. Next candle closes here, slowly transitioning it down, but it's not clear. And next candle here kind of closes, and then this wick already upside. Even though there are three candles, it's still within a low, a really inefficient market where price is moving extremely clear, and it's easier to just pull the trigger and then get in the trade rather than waiting for a candle rejection or a candle sign. It's just that the way that I used to it reduced a lot of losses just by the fact that you can realize these kind of signs. And so from a normal perspective, these setups are fine, right? If following the sheet itself, pulling this up once again, if following the sheet itself, the zone matches the no the Fibonacci retracement matches the trend line. It does, right? You enter on candle rejection and stop loss above, in this case above the previous candle wick. So from a normal perspective, this could have been a trade. But however, it comes a lot more into it because this whole move upside is all white candles and it's continuously improving in body size. That means that it's continuously improving and increasing pressure, pushing price even higher. And to me, it's not a valid trade. It comes with time and identification of price action. Um, it's hard to explain 100%, but from the gist of it, the notes themselves just sums up, I would say, 80% of how I approach the trend line. And then the order block side of things, I don't have the notes. I had the notes before, but it's all the way back in like June or July, I believe, when I did my last note. But it seems to be so well adapted. That's just I don't need notes for those. You don't need the notes for the what is it, the order block strategy, or how I interpret the order block and order flow in general. It's just that the trend line is really new to me, so I'm still have a lot to learn. If you have any any suggestion, please tell them in the comments because I'm not that perfect of a trader. I'm not that fully adapt into the trend line break kind of like strategy. So that's why there's still a lot of oranges before. Order blocks nowadays, if I see it, I'll take it, right? But this in this market here, nothing. I mean, in this market here, this is why order blocks are also really a disadvantage because in these kind of market, you can't see any structure. You don't see a lot of order flow. Usually, I wait for 50% retracement and then see any sign of transition. For example, this Lego structure here. from the low all the way up to the high, and I see this one here, Fibonacci 0.5, and let's just delete this trend line for now. And you can see how this price, after price touches 50%, comes up, breaks through the previous high, and then come back down to 50%, right? 50%. Even so, it matches 50. I still need to see it retrace in within one of the order blocks itself as well. So after it retraces on one of the order block itself, I would entry, and if it's a 1 minute, I wouldn't entry. That's the whole thing. If it's a 1 minute, I wouldn't even take my entry and then wait even a little bit closer downside. If it's a 1 minute and there are multiple entry zones, like the 1 minute here, this is one entry zone. The second entry zone is down here. So I would wait for multiple entry zones to be confirmed. That's how tough I was. That's how strict I was in terms of approaching entry and the setups in general. But after a period of a time, I just see all the setups just slowly disappear because market doesn't move that way. The market does not adapt to you. You need to adapt to the market. So slowly, I learned a lot about price action and how the candlestick tells the whole story instead of just at the looking at the overall structure and how price is bouncing up and down, how price is respecting this, respecting that, instead of not looking into these kind of candles and see the story it told. So one of the rejection, it can be order consumption, it can be buying pressure here, and multiple candles like that, it could be strong rejection, or it could be strong order consumption. In which case, engulfing candle meaning that you know um, the bull or the bear has a win over the other one is slowly transitioning upside, but that's just works most of the time. Engulfing candles really happens when we have the strength 100% when it is at the all order block area as well. But yeah, before when I backtest all the order block strategy I have before, not a lot of entries happen, and even if there is a entry, chances are it's like 60%. I would say I lose 1 out of 3 times backtesting, and 2 times, however, only 2 times works, and it doesn't even pop up during the week as well. So it's a really kind of semi uncommon setup that sometimes it's gonna give a perfect trade just like that, and even if it give a perfect setup and it fit the rules, it's still not having a high win rate. So that's why I kind of look back and kind of tweak myself a little, tweak my strategy a little, see what I was missing, and then I see all these trend lines coming in. I see all this bouncing up and down, respecting it really nicely. And after the trend break, price just basically continue. So I see all this break has to have some kind of sign into it so it can continue. And so the trend line is just something I incorporated really recently. I still have a lot to learn on the trend line. If you have any suggestion, please type them down or just ask me in general. Um, yeah, I'm still improving. I'm still improving as a trader. I'm still improving generally. I'm not perfect. I don't think anybody is perfect in terms of approach. It's extremely subjective in how people approach the market. People use indicators, people use price action, and stuff like that. But the funny thing is, at the end of the day, if a profitable strategy works, then it works really dynamically. If a bot trades, it trades according to the stats, um, according to the indicators, what the indicators tell them to do. But as a human trader, emotions come into play, hesitation come into play, and as a human, we can analyze the market in a rational way because the market is made by us. If the market is psychologically made and maintained by humans, and in extreme volatile markets, the machines cannot trade. It has to trade within the ranges like these. Uh, but yeah, that's pretty much what I want to get out there. It's already 10:40. Some structure being formed, bouncing off of the trend, which is really nice. I still see this here as not an official re-entry into the trend line. Let's see all of this here, see how this gonna go. This low, see if it's gonna break this one. Uh, yeah. With that said, it's forming another triangle pattern. Let's just draw our trend line ups here. There we go. We're actually gonna break through that. I want to see an official break. Yeah, hopefully you understand. Um, I'm still improving as a trader, but those are my criterias. I just give them to you on the notes. I would basically type it down here. That's a YouTube log. Copy. I'll paste it in here. And it is a little bit too much. I will. Nah, it's a little bit too much. It doesn't let me paste it into the comment. But yeah, all this here. I put it on the side. That's basically the gist of it. It's not even that secretive, I would say. It's not even that secretive. It's something I think most trendline breakers would probably know, and something that you can share in terms of strategy wise. I don't think it's really a big deal to not share it. Oh my god. There we go. Seems like price have given us a small official break. See here, I'll come back. I'll come back to that. 3 bounce of the trend, really nice there. Uh, this is where one of those examples where the trend lines and the what is it? The trend line and the auto block approach kind of intertwine with each other, because on the trend you can see how the trend actually breaks on the 1 minute here. Even though it's a 1 minute, it's still I still consider this as a trend line break. And after it broke through there, right, price enter here on the 1 minute and price pushed down. However, on the 3 minute here, I want to see this as an official break. So this candle low on the 3 minutes has not been break. It has not been broken. It's still being maintained. Um, it's still being maintained right now. So there are still buy side liquidity sitting here, trying to push price even higher. But on the 1 minute, you can see that price is trying to transition downside. So there are mixed signs in between. That's how sometimes it's gonna intertwine with each other. And yeah, that's just the way it is. The order blocks really form the structure and how market maintain its support and the resistance level. And the trend line is just dynamic, right? Sometimes it works in clear market, sometimes it doesn't really go along as well. So this one here on the 1 minute, you can see is one of the better trends. But on the 3 minutes, you can't really see anything here. You just see a few candles, but the 1 minute is not really structural. 5 minutes is something structural that you need to pay attention to. So 3 minute candle, this still here, the wick downside. I want to wait for this to officially break. If not, it is still maintaining this pressure upside, even if it breaks through this one right here. And you can say that's a trend line break. Sure, it is a trend line break. At the same time, incorporate with the order block structure as well. See how this order block still push in here. I want to see this officially break before it transition down. So it's kind of mixed in between, but I'm still in the middle of combining these two together, and this is one of the better signs of how they can really oppose each other. They need to line up before it is one of the opportunity, kind of confluence. So now after this, price continues to push up even higher. You see how it maintained this 3-minute integrity of support zone, and it's continuing even higher now. Delete this one. 15, yeah, nothing here in 15 to see at all. Price is extremely choppy. It's just sideways. You don't have a definite overall macro direction of where prices, where price want to go officially. This potentially be a trade setup. Or just let me mark it down. 3, 5, no 5, 3. Price left the zone. So yeah, before when I was doing back testing, before when I was developing the strategy, um, this trend line in interpretation as a whole, if I see the break like this, I'll see like, okay, so how did this break maintain? How did this break happen, and how did it maintain the move? Where can I enter? And this is kind of the trade that you understand and see from the price action alone. That's why I don't use indicators, because you can't really evolve around indicators. He's just gonna rely on those indicators in general in order to make a trade. Price action and candlesticks alone, it helps tell you a story. So if you just backtest and analyze the algorithm in the market and how market structure work there, right? Just naked charts, just naked candlesticks, you will see that it has a lot of patterns that a lot of people really don't see in the market. And trend line is just something really clear. Everybody can see trend lines even without drawing them up. And there are patterns like order block patterns, how it retraces, and there are, I would say there are minor transition trends. There are stop out. For example, this one here, maybe stop out of the previous wick. Maybe we gather liquidity, stop people out, and then push price up again. There are a lot of patterns you can see and understand just by looking at the chart and having more chart time in general, and how it can really translate into an actual strategy. And so this is just how I develop it. I see all this trend being broken, still maintain. Okay, so where can I enter? Where can I make an entry here so that I can be profitable and make a trade? And this here, interest zone, this one here, I also see there are a lot of patterns coming into the market as well. There are key levels where there are pivot points between the two. So let me hide everything here. No, not that. Translate to the line chart. There are key levels, which I mean like the body candle close and the body candle open matches together. So this here we don't have a lot. This one here, maybe a key level here. So this pivot of our body candle coming down and this pivot coming up, it bounced off of the same line. So it confirms that it is both a support and resistance. And because of that, it has a lot more strength than just a normal bounce off the downside, like a support or just resistance in general. So this point in time, it will have a lot more strength because it has been bounced off both sides. And the higher the time frame, the stronger the key level, the stronger the key price. I always put it into a round number, the nearest round number. Sometimes in small market it doesn't work that way and you have to use the odd number, but then on the higher time frame you can just round it down to one of the round numbers, and then you see that as a zone. You don't see it as an extreme price point. That's just a zone of where price can potentially retrace. uh, all right, so price is currently pushing down into the 3-minute and the 5. So again, I know what this is going to be. So if you can just if I can, I would refers to the note itself. So in which case here, it's just not a 1 minute itself. So this has a 3 and 5 minute OB. It has been formed. So I put cautious in here. Wait for a candle signal or rejection before entry. Stop loss below and above previous candle wick. With this one here, I'm going to look for a candle rejection or just candle signal in general, so I can enter. At the same time, you see how it complements and kind of stop each other out because of this leg of structure here, from the high to the low. It kind of reside at the 70.5, which is the optimal entry zone. And so if price have retraced 50% already, chances are it has a lot more selling pressure or buying pressure, pushing price past the the setup that we have right before, right here. So it's like incorporate both sides of the market, I would say. Both sides, and that's why it's got a lot more complicated over time. I see these really easily. This one here is a candle hint and the candle wick, so let's mark that blue. So now it's a lot harder for this to retrace back out once again because it has already been through the 0.5 level and has touched the 70.5, which is optimal entry. Still bouncing off of this 1 minute here. Let's see how this candle gonna close. Let me draw the default straight projection of where it can be. I would take it as a 4 pip, and let's see, we have 1 to 3. Good candle. So this here, it doesn't flinch me because it doesn't match up with all of the criteria that I have. So even if price come all the way up here, this candle basically push all the way up. It doesn't flinch me because it doesn't match up with my strategy I have before, and I believe through my backtesting, believe through my own due diligence that I have make a strategy that I feel comfortable following instead of just trading a random trade itself. And I can journal if I've taken a random trade and opening different trades at the same time. And that's why I only trade one position, one pair for now, to focus on the full power of it. Kind of focus on everything first before I move on to another pair. Or I add another pair into my portfolio and start trading that pair. I used to trade EUR USD, but then that pair doesn't really respect the trend, doesn't respect the order block, doesn't respect the Fibonacci all that well because it's so diverse of a pair. Everybody traded that pair, so that's why the movement is also so diverse, and it's a lot harder to take a trade because it's so diverse. The reason why people are drawn to it because of the spread, which drawn even more people to it. That means the spread is even more diverse. That means that people can tick scalp, which basically is buying in and selling out in the same candle, 1 minute candle, and I don't like doing that. And yeah, that's why candles sometimes kind of wick you out. On GU, however, the spread is a lot bigger. It's all a whole point. Most of the time, it's a whole point. Right? Let's see here, 1 to 3, and seems like we have some kind of pre-transition here, so it can't happen. This trade can really much happen. It's just a pre-head and shoulders. Coming back up here, this can really be price. It can push all the way down, break through this previous low, and then come back up again or form any 1 minute and then continue down. This is more of a better scenario to go for than just enter in right here. So I'm not gonna enter in the trade just because this is at that significant level. It is at that Fibonacci level where price would basically form a transition. So I'm gonna wait for this trend line to be broken or this previous low to be broken instead of just coming into the market blindly like this. You can see how the projected trade. just like that. A lot of these trades you can see is going to be a lot in the book, but the book itself doesn't incorporate the whole market structure in general, right? They just know there is a setup, then you should take it. We don't, as humans, we can and we should not move as machines. We should not um, look at the market as a machine. We should look at the market really rationally and see all the price action in general. We do something the machine cannot do. Combine a strategy. We do something machine cannot do, like confluence with price action, confluence with the experience we have, and the gut feeling of a trader, of confidence. Just like your trade, just like your job in general, you feel something is wrong, you feel something is right, you do something right or wrong, and it basically gives you this gut feeling, but this a confident gut feeling, unlike the gut feeling of I feel this is not good. The gut feeling of seeing the price and like this in general, price come up here, like this gut feeling with confirmation, this push up, down once again, all of this price action pushing up. That means that a lot of buy pressure, and then there's just this sign here, which is a small hammer, this sign here, this sign here. After all of this being broken through, you're still not gonna believe where it's gonna go, right? We're still within the Fibonacci level and has been oversold for a long time. So the chances are it's not gonna, keep pushing through without any major structure. So it's like a confirmation of a gut feeling. You already have experience with the market, and you can confidently say so, um, of where it can go, basically. So now, where the market is at in general, I would want to see this happen. I want to see this setup happen instead of taking a trade from this order block here. I want to see this trade being broken through. And let's see if it matches my projection. Let's see if it matches the prediction or not. It's almost 11. I'm gonna extend the I can't say the period. I'm gonna expand the period. Can't say the period. For the next few minutes. See how it goes. And you can see here, price really reject after this 1, 2, and now it has a third. So it is a triangle pattern once again. It's one of the in the book patterns that most people can see. So now it has two trends to break. One is this, the other one is that. But I am leaning towards this one here. I'm leaning towards this trend break because it is at that Fibonacci level and is already retraced at 70.5. So now we're looking for a sign, just kind of combine both in together. So we have this 1 minute. It's a little bit big. This 1 minute interest zone is a little bit bigger than I thought. Let's just project the trade and see our stop loss, see how it can be. 8 pips. A little bit big for my appetite. 8 pips. And 1 to 3 all the way down there, minus 27. It can be all the way down here as well, but it's almost 11. I'm just gonna mark for 1 to 3 if there is a good structure area, good enough area, I would say. Let's see. Let's see how this candle gonna open up. And Jeffe, hope you're still here. Um, I would say this trade here. You say asking about the idea for short. It's drawn after the fact. So yeah, I didn't take this one, but the idea around this trade, idea around it is that it broke through two of the trend, 1, 2, and then the third one being broke off. Third one here, bounce after price break, price bounce up from here. Essentially, it broke through the 1 minute interest zone, which is something that I don't like. but at the same time, it's still within the Fibonacci. It's still within this 5 in general, still within the interest zone. So you can see here this high still being maintained. The trend line has not been touched just yet, so it still have a lot of room. So here, price touch the trend line, give a sign of reversal and rejection. Give the sign of rejection here. Price coming back up, and no, give the rejection, push 1, 2, and then price come back up once again into this double top area, and where price just reject off of it. Wait for this candle to close, and then immediately after this candle close, enter right after. And that's the gist of it. And this is the confirmation, because we have a candle rejection, candle engulfing, and then a following candle. Next candle coming up closes within the zone, and then we can enter right after this candle close. So that's a double top, still trading within the zone itself, within the range of the trend line from this first one, this second one, and then now the third one. Just trading within the zone. All right, so this trade here, let's go ahead and CO this and see how this plays out. Stop loss a little bit high. Yeah, stop loss is a little bit high, so I'm gonna see and kind of somehow lower it down. That's not a stop loss. That's just an entry. 4 pips. 4 pips key level. Hold on. This one here is good key level. Cool. Mark this. Trade has already left the zone itself. We can ride the market down. And after the price broke through that, this can be a good key level here. So this could have been a better entry. But I already entered in the trade right here. And stop loss even higher, in which case I'm just gonna enter in the trade when price have this just a little bit higher. I was talking while the trade was forming, my bad. At the price broke through the previous trend line, coming back out. Cool. We end the trade. Point 0.5. Three, 5. Can't really stop us out here. It's possible that it can stop us out. Seems like it. Nope. Still maintaining it. Good candle rejection. And I'll say that's a stop out. And we have ourselves a loss. Trade happens. It happens. And yeah, from that point, push up. Setup was in fact valid, but then, the trade sometimes doesn't work out. That's a loss for the day. Minus 1R. Reference point. Entry. I'm going to journal just a little bit here. See if we can make price re-enter once again. Kind of re-enter in the trade one more time. This one. See how this candle going to close. Three, 5. Good rejection from 5. Also a lot of rejection pressure from the downside as well. Candle did not close the way that we wanted it, so this trade is discarded. Alright, so that's it. We have a 1R loss for the day. 1R loss for the day. And with that said, price coming back into the uptrend once more. Volatile after the news. Yeah, we have a 1R trade. My bad, minus 1R for the day. With yesterday profit, we still have positive 1R. And yeah, with that said, thank you for watching. Thank you for coming on the stream. And I will end the stream here. Lock this trade. And I'll see you tomorrow on Thursday. This is the last trading day. Yep. Strategies, that's why there's percentage of why it works and when it doesn't. So with that said, thank you for watching, and I'll see you tomorrow.